Welcome back, everybody. So today we are going to be talking about the stock market, the bond markets, and everything else in between. There is a significant amount of things going on at the moment, specifically in the crypto market and everything else. In the last 24 to 48 hours, I've probably received well in excess of about 10,000 direct messages just in relation to positioning, etc., etc. What should people be doing? Blah, 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 blah. And I just found it incredibly fascinating because I don't think it hasn't come as a surprise to me, because of something what I was highlighting a couple of days ago, just in relation to the put to call ratio. Because a lot of people were very, very, very deterministic in regards to price action in October, November, December. Obviously, the overall narrative is that September has historically been incredibly weak, and October, November, December has been historically very, very bullish for risk assets, for crypto, for stock markets, etc., etc. So basically, the put to call ratio is that when you have a lot of people very deterministic about price action and they are taking out a significant amount of leverage on the call side, you can start to see this in the put to call ratio. So calls are basically people taking out contracts that the price is going to go up, and you can take out a significant amount of leverage as a result. And on the put side, this is basically just people determining that the market is going to go down, and you can take out a lot of leverage. And when this ratio is skewed one way or the other, as a very, very, very large player, you can basically push price to these liquidation levels to drive a lot of liquidity. So it allows you to basically get a large position, because you know that a lot of people would be forced to liquidate at these specific areas. Now, you can basically determine these areas by putting into Google, like Bitcoin or gold or silver, put to call ratio, and it will show you the ratio over the last 24 hours, 48 hours, etc. Something what I use is called Glassnode. That basically shows you a lot of things from a crypto perspective, just in relation to obviously call options, put options, etc. And that ratio was about 67% call options. And again, it doesn't really take much to drive the price down by basically obviously selling a little bit of Bitcoin, and obviously you could take out a short position as a result, and then you have this cascading liquidation event, and that is basically what we saw. And again, there's a lot of people who are sending me direct messages, obviously asking what they should be doing. Should they be selling? Should they be buying? Should they be doubling down? And I think this is just something what a lot of people are doing at the moment. They're basically doubling down again, because they are thinking, well, all the leverage has basically been is all out of the current market, and I can take out more and more leverage, obviously, for the market to go back up again. And you might get a little bit of a bounce, but it wouldn't surprise me that if we see more selling pressure on the downside, just because of more people doubling down on their position, because of retail. I mean, retail ultimately only know to buy the dip, buy the dip, buy the dip, buy the dip. We're in a bull market, buy the dip, buy the dip. And you know, if you are a very, very large player and you start to use the put to call option ratio, and you start to see a lot of these retail investors take out more and more leverage, you know, it's kind of like being at the casino, right? And you are down significantly. I mean, you know, you start to do stupid things, take out more leverage to try and claim it all back. It wouldn't surprise me if Bitcoin started to go to around $100,000 and you start to really remove a lot of the leverage in altcoins, in Bitcoin, etc. And then you start to drive the price back up, because how that would feel emotionally would be so crazy. You know, I mean, the amount of people who would be significantly wiped out, and then you start to see the price go back up. I mean, the amount of FOMO and everything else, it would be, I think it would be very, very difficult for a lot of people to stomach. So yeah, the crypto market, there's a lot of things what have been going on. Obviously, in relation to traditional markets, obviously the stock market and the bond market, the most important market in the world, by the way. I found the price action to be incredibly, incredibly fascinating on Friday. Obviously, Trump basically came out and basically said, oh, tariffs between China and the US, blah, 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 blah. Obviously, the stock market sold off, crypto market sold off, obviously, and the bond market started to get bid on all duration. And I found this incredibly, incredibly fascinating, because this is incredibly good for the United States, obviously, going forward, because it allows them to refinance a lot of its debt at cheaper rates. And, you know, I don't really think it really matters what Trump actually says, because if the stock market is going down and the yield on the debt, US debt, is coming down, this is very, very good for the United States government going forward. And I think a lot of people don't really even pay attention to the bond market, because again, it's not even a sexy market. It doesn't even, you know, no one even talks about it apart from me, really. You know, everyone's talking about Nvidia, Google, Apple, you know, blah, 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 AI this, AI energy this, plays, infrastructure this, rah, 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 rah. No one is talking about the yields on the debt, And there was a few comments in my previous video as well, just in relation to the United States and Argentina, and why is the United States not buying gold? Why is the United States not buying silver? Why is it, basically buying the Argentina peso and getting into bed with Argentina? And I'll tell you why they are getting into bed with Argentina. And this is something what the United States does anyway. It basically gives loans out through the IMF, and IMF is basically the International Monetary Fund. These are loans in US dollars. They go to these different types of countries, obviously developing markets typically. And as a result, these countries have to pay back them loans in US dollars, what ultimately makes these countries weaken their currencies. And obviously the United States can basically extract resources from these countries. And this is typically why you see developing countries always be developing, because they typically are so saturated in debt with the United States or with China, etc. But the reason why I think it's the reason why I think it's very important to actually pay attention to is because of the resources what Argentina currently has. So Argentina currently has a lot of lithium deposits, a lot of shale gas deposits, a lot of things in relation to copper. And this is very, very, very interesting, specifically if you are trying to manufacture in the United States. And obviously you are trying to diversify your supply chains from a rare earth mineral perspective. Obviously what is going on with China and the United States, obviously in regards to minerals, it's not a shock to me that the United States is trying to get access to more supply chain. They are trying to manufacture a lot of things what I would say are more of a national security concern in the United States, and this is all in relation to chips, etc. So it is not a shock that the United States is getting into bed with Argentina. It would not surprise me, that you start to see more of these deals come up over the next couple of weeks and months, because again, it's all in relation to resources and what the United States can basically extract from these countries. And something else what a lot of people were basically highlighting is that the yield curve intervention from a Japanese perspective, from a Chinese perspective, and how the Chinese and the Japanese basically manipulate their own currency markets and bond markets. Yes, I'm fully aware of it, obviously. And this is the reason why Trump is very, very vocal about China, because China basically manipulates their currency so that they have a weaker currency, so their exports are obviously significantly more attractive. And something else what I was talking about a couple of months ago as well was just in relation to China and the United States. You will start to see more and more escalations in all these other different types of countries. And the reason why I was talking about software before, just in relation to messaging and media, is because a lot of these messaging and media, you can start to turn things up and turn things down depending on specific platforms, what specific countries have. So last time we saw obviously the United States and China get into this whole tariff war. And then overnight, you saw an escalation between India and Pakistan. Now, again, when you start to look at India and Pakistan, in Pakistan, Instagram is banned. In India, TikTok is banned, and obviously the messaging can be turned up significantly. And as a result, obviously you had a ceasefire agreement between Pakistan and India, and then on the same day, you basically saw a pause on tariffs. And I think a lot of that was to do with that the United States basically cannot get into another war. It's currently already in Eastern Europe, the Middle East, and obviously it could not necessarily finance another war in India and Pakistan. So again, I mean, when you start to look at all of these systems and network effects of different types of platforms, I think it all boils back down to national security and specifically the bond markets. And this is the reason why I keep talking about the bond markets and how these platforms have so much influence globally. And I think a lot of people basically just brush past it. I don't think really people pay too much attention to it. And I was having a conversation today in my DMs just in relation to TikTok, and somebody was basically saying that TikTok is not created by China, and China basically has no influence on TikTok. And I would just say, if that is the case, then why is TikTok banned in certain countries? It's because of the motives, it's because of the incentive structures. Now, if you just think about what TikTok incentivize in terms of, let's say, I mean, you've all heard the term doom scrolling, right? I mean, you're constantly scrolling TikTok or you're constantly scrolling Instagram, and how the algorithm is specifically geared for you to be incredibly engaged, and how you don't really leave your phone for hours and hours and hours. I mean, we have people who are constantly glued to their phones for hours and hours every single day, and how TikTok basically incentivizes more content of certain genres, right? I mean, I'm not going to get into the specific genres, but again, you want to be looking at the incentive structures and how you can basically disrupt the entire West by obviously implementing specific platforms and incentivizing specific let's say, narratives, and pushing specific narratives and making it okay for specific narratives. Now, these platforms can create a lot of social unrest and a lot of political change by obviously influencing and incentivizing people to do certain things and certain actions. Because again, a lot of people are kind of dependent on that income from TikTok. So it kind of incentivizes certain behaviors on these specific platforms. So this is not only how I currently see these platforms and how I typically see currencies, to be honest, because you want to be looking at things from a network perspective. So how many people are actually on the network, how many people are actually utilizing the currency, and all the rest of it. Obviously, utilizing it as a medium of exchange, specifically going back to the United States dollar. If you are a Thai business and you want to do business in Mexico, you would typically do Thai baht to USD, USD to Mexican peso, etc., etc. And this is something else what I just want to touch on, by the way. I should have really said this at the beginning. If you are a country and you, obviously, if you need to sell some of your assets, if you hold US treasuries or if you hold gold or whatever, typically, if you are looking at it from a USD point of view, if you start to see the yield start to tick up and the dollar start to go down, this could indicate that countries are selling US dollars. This could indicate that countries are selling US treasuries to US dollars back to their currency. So that is just something to consider, because obviously you can go from UST, meaning US treasuries, to USD, from USD to that specific country, dependent on how much stress is in that specific country. So some people send me quite a lot of messages just in relation to that. Obviously, why is the yields going up and why is the dollar going down? And that is typically the reason why, is because some countries are forced to liquidate, obviously, US treasuries to US dollars to their specific currency. And you can pretty much see this if you look at the currency pairs on a daily basis. You can pretty much see this playing out. You can start to see this playing out in China a couple of months ago, and I think this will probably start to play out again. Now, hopefully you've got some value out of this video. To the 4 people who keep on supporting me, I hope you're having a lovely day. Take care. Bye-bye.